Money Halftime Report. We're getting to the heart of the action as it is happening today, live from the New York Stock Exchange. Stocks rolling over midday here. The dollar rally is more than 1%. Let's get straight to the word on the street right now. Our Fast Money crew today, Tim Seymour. Joining us on the webcam, Scott Nations from Nation Shares, Katie Stockton from MKM Partners, and Eugene Profit of Profit Funds. Timmy, first of all, welcome back to you. I know you were across the pond not too long ago.
Yes, I was. Welcome back to the strong economy here in the United States.
You come back. We got a much better than expected jobs report. We had a rally off the open, and then here we are. Same old, Timmy. Dollar strong, our stocks weaken.
Still struggling at 11.10 on the S&P. It's 8 times we've bucked up against it. Some very crowded trades are what's bringing the market down today. I mean, the weak dollar trade is something that's being unwound across a number of spectrums, and that's really what's doing this. And the non-farm payroll numbers were everything people wanted to see, and I think it's more than just some seasonal factors here, and that's the reason you're getting this first-round reaction to the dollar. It's big, but I don't think this should be knocking the S&P. And in fact, I think at 11.10, this is exactly what we needed, and I do think the market will go higher.
Eugene Profit, you know, there are a number of news accounts out there, and they say, you know what, investors are now worried about higher interest rates. And yes, Fed funds futures increased in terms of the likelihood of a June rate hike. But come on, Eugene, is it really worries about higher interest rates?
Well, I think slightly. I think it's a little bit early. I don't think we're going to see higher interest rates for at least another 6 months. But I think it's actually good news that the market's kind of rolling over here today. We had a positive headline, and I think the valuations have actually been stretched. And so you're seeing a reflection of investors starting to take profits. They're pretty close to their sell button to lock in some of the gains that they've had this year.
Talk about taking profits. One name here that we are going to focus in on, Apple. Apple really rolled over mid-session. Katie, you pointed this out. Some key levels being broken here.
Right. Apple fell below its 50-day moving average intraday. I don't think it's as significant as people are making it out to be. It's been a support level for some time. In fact, the last time it was below it was in March, so that's why it's hitting people's radars. There's additional support for Apple about 185, 186. It's as oversold as it was back in February based on my measures, so I'm not that worried about Apple, and here it still obviously is in a positive momentum environment. I'd consider looking at names like Dell, however, that have underperformed, that have not had their turn, if you will.
Scott, out in the options pits, are you seeing any unusual activities when it comes to the sectors here? Because we certainly have seen some big intraday moves amongst some of the sectors.
Yeah, you know, some of the financial names have seen huge option volume, and I mean even bigger option volume than we normally see for some of the second-tier names, like Citigroup or Bank of America. Bank of America, obviously, its own special animal today. But also, I think that we've talked about this before. Traders are happy to run out the clock. They're happy to get to the end of the year right here. And so momentum traders aren't jumping in as they might normally. Also, and Tim mentioned this, you know, when the dollar trade starts to come unwound, it's generally not very pretty. And we see that particularly in gold today.
All right, let's hone in on those financials because, of course, we have Bank of America. It is trading higher by a little bit more than 2% right now. Citi, which is the name, is being flagged as still being owned, of course, by the U.S. government, still owing some TARP money, I should say. That is also trading higher. Tim Seymour, do you see any opportunities here? Do you think it's simply too early?
Well, I think the market's reacting to the factors related to the dollar today, but for the financials, this should ultimately be very positive. If we're pointing to a labor market which is keeping down the housing market, and we're starting to see a turn here, very good for Citi. I'd rather be a buyer of Wells Fargo. I'd rather be a buyer of Bank of America, where I think their earnings will normalize a lot faster than Citibank's. The stock I watch here, though, is very critical, is Goldman. I mean, around 165, the stock is struggling. It's been bucking up against this number. It's been holding this level, and I think it's a decent place to put the stock back on because I think the fundamental backdrop for financials is getting better.
Wells Fargo, Timmy, want to ask you about that because they still owe some TARP money. They could potentially have a capital raise, and yes, the CEO says he wants to do it in a shareholder-friendly manner, but come on, you got to raise capital. How friendly to shareholders will that be?
Well, I don't think it's going to be friendly, but I think that's implicitly priced into the stock. I mean, the reality is that Wells Fargo has taken enormous market share out of this. They have, still a significant commercial real estate exposure that I think is weighing most on this stock. But as Bank of America has showed, when you get the government off your balance sheet, you're saving $4 to $4.5 billion a year in a dividend payment to the government. That's what we need to see for these guys, and I think the market's priced some of that in.
Eugene Profit, you take a look at the financials landscape. Any names that you like in particular?
Well, I agree with everything Tim said. I think today I'm starting to look at Bank of America a little bit closer. I don't own Bank of America. I own J.P. Morgan, and I've owned Wells Fargo in the past. I think that once you get the government out of the way, and the fact is we have a $25 price target on Bank of America. We're just not in a hurry to buy it because we want to be certain that its balance sheet is strong.
All right, let's move on and talk about those retailers today. The retail index is actually down by full 1% here. Following a strong open, Amazon is a big loser on the session, off by more than 3%. Scott Nations, Amazon.com, a stock that had hit 3 records in as many sessions, 4 records, I believe, in as many sessions. Would you say, yes, it is time to take profits here?
I think it probably is time to take profits. You know, it's a neat name. It's probably the class of the space, but they've come a long way, and I'm not certain that the holiday season is going to be as good as they had hoped for.
All right, let's hone in to talk about our chart of the day. And Katie, you're watching a retailer, and that is Kohl's.
Right, I'm watching Kohl's because it's gotten oversold within a long-term uptrend channel. So if you look at something like Amazon as being equivalent to Apple, while Kohl's is equivalent to Dell on the chart in that it's pulled back. It's been an underperformer over the short term, but it's come down into some support right in the low $50 area, and initial resistance is up about $61. So I think that's a nice ratio.
Okay, let's move on and talk about gold, because the precious metal is struggling today. No surprise given the dollar rally. Commodity is off by more than 40 bucks right now. Gold miners also lower on the session, although bouncing off of those lows. Let's go straight to the fast line. The liquidator is on the phone. Hey, Joe.
Hey, Melissa, how are you doing?
Good. No surprise in terms of the decline in the precious metal. In terms of the miners, we're seeing a nice bounce there. I'm wondering if you think it is time to pick up any of them.
No, absolutely not. You do have to use the price action in the gold futures themselves to script out what your play is in gold. You got to look today at 840 this morning. You saw significant selling pressure once gold broke below $1,200. There were a lot of electronic stops went off. You had a second wave at 1045 this morning when gold broke below 1180. The price has not recovered above both those ranges. It would lead you to believe that a test of last week's Dubai low at 1135.80 is in the cards.
1135 is what you see next, Joe. I'm curious, Katie, when you look at the charts, is that what you see as well?
I think that's a little bit conservative in terms of short-term downside. Initial support on my chart is 1072. That's based on former resistance. I think that's realistic for the short term. A correction can be very, very significant in this kind of environment where you have a parabolic uptrend, despite the fact that gold still has positive momentum over the long term.
Okay, liquidator.
And Melissa, you mentioned.
Yeah.
Sorry. I was just going to say, you mentioned the gold miners. Barrick's down 12% off its highs. I mean, it's beaten gold on the way down here. Had some negative news today, which about a court ruling which is going to stop them from mining an important deposit. I think a lot of the miners actually have taken this down even in advance. I think Barrick at 40 bucks is about 15% off the top. It's a place you can start to get excited about a company who's pricing on their books gold at spot prices, unlike a lot of other folks.
All right, liquidator, I will see you on the desk tonight. Our thanks to Joe Terranova. Time now for the Fast and Furious. We're going to answer all your burning questions heading into the close today. Bank of America initiating Moody's in McGraw-Hill with a buy rating. Timmy, are you a buyer?
No, I think this is short covering. I mean, their outlook for they're stating the outlook for the credit markets has improved. That's the reason to buy the stock. The confidence in these guys is very low. This was short covering today.
Tim Seymour, sorry, we're going to take a pause here. Want to go straight to Steve Leisman with some breaking news. Steve.
Thanks very much, Melissa. Just talking to a source familiar with the thinking over at Treasury, and they're telling me that they will auction off the warrants it has from J.P. Morgan from the TARP next week. They have a day by the end of the day today, but we are told that J.P. Morgan warrants will be auctioned off next week. The Capital One auction, we are told, was oversubscribed. We know the price was well above the minimum price, which was $7.50 for these 10-year warrants. They sold them at $11.75 in that well oversubscribed auction. The Capital One auction gives the Treasury confidence now in its negotiation with the banks about what to do with these warrants. Remember, the Treasury gave the money to the banks. The banks gave back preferred plus the warrants, which is an add-on that helps taxpayers recoup some of their money. Treasury holds 88.4 million warrants for J.P. Morgan common stock. Again, these can be exercised over a 10-year period. And really, these instruments do not exist out there in the market. For example, the longest dated option on the Capital One was like 2 years. So what they're finding is confident the market can value these things, will value these things, and they do have some value for the Treasury. Melissa?
Okay, Steve Leisman, thanks so much for that update. Going to take a break here. More Fast Time, Fast Money halftime report right after this.
A blowout jobs report as stocks rocking and rolling, but should you